Welcome back, everybody. I got a request to analyze Etsy, so that's what we're doing today. Looking at the 5-year chart, they are back to what they were 5 years ago, pretty much, at $67 a share. They had gotten up to a peak of like $300 a share back in the clown market, but now they are back down, so maybe this presents a buying opportunity at this point. Let's check it out. Looking at a market capitalization of 8 billion, so pretty large company. Yeah, pretty large, and price to earnings ratio of 30. So not cheap, not not cheap according to the price to earnings. Checking a little bit closer into their financials here. Let's take a look at their revenue growth. So the revenue growth has been really, really strong from 2017 to like 2020 and 2021. But then it dropped kind of off a cliff, and now they're only getting 10% and 7%. And even on a quarterly basis, they only had plus 4% last quarter. So that is concerning. It does look like their growth is stalling out here. So yeah, we're gonna have to watch out for that. I think that moving forward, they're gonna do better than 4%. But maybe not. Like I don't really see their revenue declining or like completely stalling out, but it's definitely going to be a slow grower from here. Taking a look at their profit margin here, the gross profit is super, super high, which is good to see, but then they spend a lot of money on marketing and on their staff and on their coders, research and development. And so they convert 375 million, which is like 15% into operating income. And then yeah, after that they do have interest expenses. Also, another thing that I'm seeing here, this $1 billion non-operating expense, and it was an unusual expense because of an impairment in their goodwill on their balance sheet, because they actually made a couple purchases uh, of a couple different companies that turned out to not be so good. So let's take a look at their balance sheet now, and they do have negative book value, which is always not really a great sign to see, but it's not super concerning, considering that their net debt is 1.29 billion, and they do have pretty high cash flows. They could probably pay that off in a few years. So it's not horrible to see, but it's definitely not great to see. What I'm looking at here is in 2021, or from 2020 to 2021, they actually took on like $1 billion worth of debt, and that was to fund their purchase of a couple brands. And it turns out that they didn't turn out so well, and they had to write those down. So that's why their income was so much lower, and that's when their book value went negative, is because their assets dropped from 3.8 billion to 2.6 billion. In terms of cash flow, they have really high cash flows at 600 million like every single year, and then they pretty much just buy back stock with it. So they bought back like almost 600 million worth of stock last year. Um, what do I have to say about that? Well, pretty much they they issue a lot of shares and then they buy back. So it's kind of like they issue a lot of stock-based compensation and then they buy it back. So like if you look at their share count right here, their share count has actually gone higher from 118 million all the way up to 122. And that's because they issue so many shares to current um, like workers and to like the CEO and whatnot. Like you can see the diluted shares outstanding are really high, and that means that they have outstanding, or like they have stock rewards that they're giving out to like workers in the company, but they haven't realized those rewards yet. So that's what that is. Yeah, so if they weren't doing so much stock-based compensation, then who knows what their actual income would be? It might actually be negative because, of course, if you're paying in stock, you're not paying in cash. So so looking at their slides here, um, yeah, they think they have a runway for growth. They had 30% of people, or 30% of women basically in the US and UK shopped Etsy at least once last year. So they think that can grow. And yeah, definitely this site is marketed more towards women. and 10% of men have shopped it once. Can that grow? I mean, it's already at 30%. Maybe it can grow a little bit, but like Etsy sells a lot of specialty stuff, so um, really you really have to be like upper class to like want to buy some. Well, I don't know. You could buy it if you're lower class as well, but yeah, it's just a lot of unique stuff. I mean, I guess with the world like overall becoming richer, they're going to want to look for like more specialty stuff. So, I mean, Etsy's not a bad play to be honest. But yeah, these are the two things that they bought. They bought Depop and Reverb, and both of them have been pretty bad investments. At least according to their goodwill, they've really spent a lot on these businesses, and yeah, then they had to write them down. So I'm not quite sure how much this is actually contributing to their revenues, but yeah, they don't really talk about it very much in their slides. Let's look at the analyst estimates here. The analysts are expecting 2.61 earnings per share going up to 3, and then revenue 2.84 billion going up to 3 billion, which is like an 8% increase. So I put that stuff into the DCF model. And now this is going to be kind of tough because Etsy could go a lot of different directions here. Let's zoom in. Put the EPS estimate here, revenue estimate here, buybacks. They pretty much buy back a bunch of stock. I put 1 billion here. They probably won't do that much, but net debt of 1.3 billion, a discount rate of 10% because I'm looking for a 10% return on all my stocks. Exit multiple of 20. Right now they're trading at a 30 price to earnings ratio, and I think since their growth is kind of stalled out, I think an exit multiple of 20 is fair for this business. In terms of growth, 16% in earnings growth, and then going down to 10%. Do I think this is realistic? Um, Actually, I do. If their margins expand, but they really have to stop doing so much stock-based compensation before you even realize these earnings. Like it might show this type of earnings growth, but yeah, I, I don't know. It's tough. It's tough to value this business really. But even with the strong growth, the fair share price still came out below their current price. And using the revenue model, so I'm expecting 5% growth moving forward. Okay, the analyst said 8% for the next year, so I guess we could put 8% there. But their growth has really stalled out, so I think 5% growth. I mean, it might grow a little bit more, but to be conservative, we'll say 5% growth in their revenue and profit margin. I think that they could expand their profit margin, but also the only reason they have decent profit margin right now is because they do so much stock-based compensation. So it's kind of tough. Like I think this paints a pretty rosy picture for Etsy. And if this case plays out, um, which I'm not quite sure if they could pull this off, but their gross margin is really high. And but they do need to spend on marketing, and yeah, I don't know. Um, but if this case plays out, then they're worth $80 a share, or yeah, about $80 a share, um, which would make them a buy at this moment. But let's just say that they can't get their profit margin up to 20%, which is definitely possible as well, because they have to spend a lot of money on marketing to keep driving traffic to their site. Then we could see that their fair share price is around like $40 a share or like 42. And if this case plays out, which actually I think this is like the worst case scenario for Etsy. Well, actually not the worst case, but the worst case would be if they actually had negative profit margin for a couple years. But I think this is pretty much a worst case scenario for Etsy. And in this case, you'd be expecting like a 2% return probably. Something like that. Yeah, you'd be expecting about a 2% or 3% return. So yeah, I think worst case scenario, you're still getting some positive return, but yeah, not much. But yeah, that's the analysis of Etsy. I hope you guys enjoyed. If you did, hit that like button. Also, I left this spreadsheet in the description for anybody to use completely for free. And leave a comment if you feel like it, and I'll see you in the next video.